We have ENIL, which is a stock in focus, and the counter is registering smart gains in trade today after Motilal Oswal recently came out with a report that it expects a revival in its ad revenues in November and December. And what have been the key factors that have been in play for the counter, and what does growth look like for the company? Well, to answer all these questions, joining us on the show is the Managing Director and CEO, Prashant Pandey, and also our colleague Saloni Dhanuka, who will help us decode perhaps the new trends that the company is facing. But Mr. Pandey, I'll start off with the possibility of the pangs and the challenges that GST had brought about earlier. So how much of that do you think has is already in the past now? And based on that, what kind of growth are you seeing, and what kind of trends are you seeing in ad revenues coming in?
Well, the impact of GST is obviously pretty much over. However, it has created a situation where advertisers are who were affected badly in the July, August, September quarter, for instance, are now cutting back on advertising to protect their bottom lines for the full financial year. So the impact on advertising continues, even though the business for our advertisers is getting back to normal.
Government has recently approved bids for 680 FM channels in 236 cities. So how will it pan out for private FM broadcasters, especially like Radio Mirchi?
Sorry, what was the question? Can you just repeat that?
So government has recently approved bids for 680 FM channels in 236 cities. So how will it pan out for private FM broadcasters?
How will it pan out for private FM broadcasters? Well, I think this is the third batch that the government is now getting ahead to auction. It has already completed 2 rounds, as you know. 2 batches have already got completed. The third batch should happen, I'm told, anytime in the next few months. So yes, it is I think the last batch of the phase 3 policy. And private FM broadcasters are the ones who are expected to bid over here. This is meant for the private FM broadcasters. Even though, in all honesty, I believe that the enthusiasm for bidding will be very muted this time around, just like it was in the second batch. And the reason for that is that the government really has not modified any policy. They have not taken into account any of the feedback that the FM industry has been giving them. And therefore, to that extent, it is just a completion of the earlier policy. And I expect that the third batch will also meet with a muted response, just as the second batch did.
And so according to a Motilal report, company is planning to spend some 300 odd crores in FY19 to acquire TV Today's 3 radio frequencies and also on phase 3 auctions. So could you give us a confirmation over the same?
No, obviously I cannot give you a confirmation of the financial deal, but what I can confirm is that yes, we do expect to acquire the 3 metro stations of TV Today as soon as the 3-year lock-in expires, and that is expected to happen by March 2018, in fact, March 31st, 2018. So yes, in FY19 we plan to acquire the 3 big metros of TV Today. I'm unfortunately not in a position to share the financial details of the deal. With respect to phase 3, like I mentioned to you, the third batch is expected to be muted.
Yes, please, sir. Please go on, sir. Please go ahead.
Yeah, like I was saying that the phase 3, batch 3 auctions are expected to be muted. And even for ENIL, I expect us to basically be looking at a few cities where it makes economic sense, either as individual cities or if when they are networked and they become part of a larger state. So we will look at each of these cities with a with a very fine tooth comb and then decide really where we want to bid for. But it's going to be a relatively very small round.
Right, Mr. Pandey, as we move into the next year, could you tell us a little more about growth prospects for old stations against new stations and what that holds in store?
Yes. So, listen, the old business or the regular business as is was obviously affected by demonetization and by GST, and then also in between by RERA, right? And different states had the effect of RERA over different months of time. Fortunately, I think all of that is now behind us. And like I mentioned earlier, even the impact of GST on our clients is now pretty much over. We see them back in business in full flow, and therefore I expect that in FY19 our regular business should really pick up. Now, we have also noticed earlier, in one of the earlier years, I think it was in FY12, when we were coming out of a lull in FY11 or FY10, then I think FY12 was a big growth year for all radio broadcasters, because there was a lot of pent-up demand for advertising, and then, the industry had grown very rapidly in that year. So I expect that in FY19 as well, there might well be a strong recovery, a strong bounce back from the lows of FY17 and FY18. And FY19 could actually end up becoming a fast growth for the whole radio industry and in fact for the whole media industry. One other point I want to make over here, that for ENIL, we had embarked on a tough journey during FY18. If you recall, we had made this announcement that we were cutting back on advertising inventory, simply because our listeners were telling us that they would prefer to hear much fewer ads on radio. So ENIL has gone down that path. We have focused instead on increasing our pricing, and if you've noticed, in the first 2 quarters of the year, we have actually increased price by about 8%, which is remarkable considering how poor the overall advertising markets were. So I think the biggest pain that Mirchi undertook in its journey of cleaning up the listener experience is also now behind us, and therefore I expect that in FY19 that factor also will kick in. So for ENIL, I think there's going to be 2 factors working. One, of course, is the removal of all the effects, the macroeconomic effects that the government had unleashed last year, and 2 is that the period of pain that Mirchi had taken for itself is also over.
So I just want to take that point forward. You said you had increased the prices by 8%. We all know that the first half of this fiscal has been marred because of GST implementation and also because of demonetization. Do you think that increasing prices in an environment like this, where overall ad revenues were already getting impacted, would hurt the ad revenues going ahead too?
See, the fact is that this is always a bitter pill that one has to swallow, and there is no good time for it. And I think we did it at a time when it was possible for us to do, because we had the impact of our new stations, which was there, and we took the opportunity to actually build on the new stations and to partly recover the loss that we suffered on the older stations because of the inventory crunch. So from that perspective, I think we were right in the timing of our decision. And I think today, look at it like this, that at the end of 3 quarters, and we just have 1 more quarter to go in FY18, I think Mirchi is better placed than any competitor when it comes to approaching FY19 and FY20. Our ad inventory levels are down to 18 minutes in peak season. And when a competition is running at 30 minutes, 35 minutes, sometimes even 40 minutes. So you can imagine that for us, the listener experience is going to weigh in heavily now in FY19. There's also new research that is expected to come in from MRUC. I think research will show up in better listenership numbers because of the tough decisions we have taken in FY18. So I think we are happy with the decisions we took about inventory crunch.
And sir, the company has launched two new stations in second quarter. So when is the EBITDA break even expected in these 2 new stations?
Usually we do not comment on EBITDA break-evens of individual stations. What we prefer to do is to talk about the EBITDA break-even of the whole phase 3 batch, as it were. So batch 1 is now completely rolled out except for Srinagar. Srinagar should also roll out very soon, maybe in a month's time or so. But overall, batch 1, which were all the big stations, the second frequencies in all our networks, the third frequency in Hyderabad, etc., that break-even should happen, in the third and fourth quarters of FY18. So we are on track to delivering EBITDA break-even, as a bunch of for the whole bunch of stations by FY18 end, or by 6 quarters, as we had said. I expect in FY19 they will all turn profitable.
And can you share some details on capacity utilization level as well as revenue per minute seen in the current quarter, sir?
Okay, now these are details that I can share with you subsequently, but we are running almost 20% or 22% inventory lower than last year because of the inventory crunch we have taken this year. I think in peak season we used to run at about 120 minutes, 130% of inventory till last year. If I remember right, we must be down to about 100% this year. So we have taken that knock on the inventory levels. In the season coming up also, I expect the inventory to remain at just about 100%. I'm talking about the top 8 markets, the top major markets. In the smaller markets, of course, the inventory levels vary market by market, but in most cases, the inventory is under 100%.
And sir, last question from my side, is the company planning to expand globally? We believe that company already has its reach in Dubai. So are there any more expansion plans globally, and how do you plan to increase your listenership there as well?
Well, you're right. We are already present not only in Dubai, but we are present in the entire UAE. We have a partnership. We have a brand licensing agreement with a very large local corporation over there, and we have a presence all across the UAE, including in Abu Dhabi, Al Ain, and Dubai, of course. And yes, we are looking at expanding globally. There's a lot of demand for the brand. There's been a lot of dialogues in the last 12 months. We are not in a position to announce any expansion at this point in time, but yes, we are looking at expansion all around the world.
So how's been the response of the new show, as the Motilal Oswal reports suggest that the Karan Johar show, which went on air on all the ENIL channels, would boost your ad revenues? Has there any incremental ads that you've received post that show went on air?
Well, the Karan Johar show is essentially an Ishq FM show. And under a licensing agreement, we are using the content in the Mirchi network as well in markets where Ishq FM is not present. I think it's an amazing show, and if you have heard the show, you will realize for yourself that what an honest and candid show Karan has put up. It's truly fantastic. If you look at the quality of the callers who are calling in, the kind of questions they are asking. In fact, we are really exploiting the biggest strength of radio, which is that you can stay anonymous. And you don't have to show your face, because most people are very shy to discuss their personal problems. So on a radio show, that's what the big strength is. And Karan is simply just fantastic. So I think we've got a very, very, very strong response from a listenership point of view. From a revenue perspective, it was the first edition. So yes, we have got additional revenues on the back of the show. But the impact of the show will be felt on Ishq FM a lot more, because that will provide a big boost to listenership and the perception that the station does something or the other which is so innovative all the time. As you know, we have a sales agreement with TV Today to sell Ishq FM in the 3 metros. So we are seeing that this is leading to a bigger buoyancy in the demand for Ishq FM in the 3 metros.
Okay, sir, thanks a lot for joining us today and taking us through the outlook on ENIL, what will be working for the company going ahead. As we've seen in the stock price, not much of a movement, Saloni, at least in the last 2 years. Last 2 years have been pretty subdued for this company. Let's see if there is any sort of revival that comes about in the second half. As you can see on your screen, in the last 12 months, it has been an underperformer at a time when markets Nifty has at least given you 27% returns. Thanks a lot, Saloni, for joining us and taking us through that.